All right, so today we're diving into something kind of cool. Um, you ever imagine owning a tiny piece of 500 of America's biggest companies? We're talking Apple, Microsoft, Amazon, like all those
With
giants.
household names, right?
Exactly. That's what VOO is all about,
Oh, yeah.
the Vanguard S&P 500 ETF.
That's right.
But is it really your ticket to financial freedom? That's what we're going to figure out today. We've got a ton of research to go through, investment notes, stock analysis, market commentary.
Oh, yeah, well, we went deep.
We're going to unpack how VO works, what its potential is, and VOS, whether those impressive returns everyone keeps talking about
All right.
are actually all they're cracked up to be.
So what's interesting about BO is that it really IS like owning a slice of
Yeah.
the entire American stock market. It's not just some random collection of stocks, though.
Yeah, I was reading about the S&P 500 selection process, and it's pretty intense. They look at market capitalization, how easily the stock is traded, liquidity, and the overall financial health of the company.
Exactly. So you're not just buying into hype, you're buying a piece of companies that have actually proven themselves over time.
Makes sense. All right, let's talk returns. The sources say VOO has delivered an average return of around 10 to 12% over the past decade.
Uh-huh.
I mean, come on, who wouldn't want that kind of growth?
Well, it's definitely impressive, but we need to look beyond just the numbers. That 10 to 12%, that's an average over a very specific period. And there have been years where growth was phenomenal, way higher. But there were also years where the market dipped, like significantly, even as much as 18%.
Oof.
The key takeaway here, though, is that VOO has historically always recovered. But we have to remember that the past is never a guarantee of the future.
So what you're saying is the potential is there, the potential for growth is really exciting, but we got to be realistic about the risks too, right?
Exactly. Every investment has risks.
For sure.
And that brings up an important question for everyone watching. How much risk are you comfortable with? That's something every investor needs to figure out for themselves.
Yeah, that's a good point. I bet a lot of people out there are wondering, can you actually build a life-changing income stream with VO? Like, can you make, let's say, $100,000 a year from this?
So let's do some quick math. If we assume a hypothetical 10% return, which, is roughly in line with VO's historical average, you would need around $1 million invested to generate $100,000 annually. But
And this is a big but. Market conditions can change, right?
Yeah.
Past performance is never a guarantee of future results.
But $1 million question, literally. And wait a minute, we haven't even factored in dividends yet?
Yes, dividends. That's a whole other interesting aspect of VO.
Right.
So those dividends, they come from the combined profits of all the companies in the fund, and they're paid out quarterly.
So it's like getting a bonus check just for owning this investment.
Yeah, you could think of it that way.
That's pretty sweet. Okay, so 2024, the annual dividend yield has been around 1.5%. Our sources even gave us some examples. VO paid out 1 Tinal 739 SAS per share on December 26th, and then 1.639 TALs per share on October 1st. Right, and it's important to note that those dividends, they can change, they fluctuate based on how well those underlying companies are performing. So that adds another layer of complexity to everything.
Absolutely. Okay, so we've covered the basics of VOO, the potential returns. We talked about those intriguing dividends. But what really makes VOO stand out? What's its secret weapon, compared to other investments?
Well, I'd say it's the simplicity. VOO makes investing incredibly easy. You don't need to spend hours and hours researching individual stocks or trying to time the market perfectly.
So it's like a set it and forget it kind of thing. You just buy VO and let it do its thing.
That's the heart of passive investing, yeah.
Yeah.
And VO is a perfect example. You're essentially letting the performance of the entire market work for you.
Smart.
And with VOO's super low expense ratio of just 0.003%.
Hold on. 0.03%. That's crazy low.
It is. And that means you get to keep more of your returns compared to actively managed funds, which often have much higher fees. It's subtle, but it makes a big difference in the long run.
So with VOO, you're getting a diversified portfolio of all these top American companies, potential for solid returns, regular dividend payouts, and all of that with almost no fees.
Yeah, pretty much. But there's one really crucial aspect we haven't talked about yet that could make a big difference in how you decide to invest.
Oh, okay, I'm intrigued.
We need to talk about risk tolerance.
Risk tolerance. How much are you willing to ride those market waves?
Exactly. It's all about how comfortable you are with those ups and downs, the
Yep.
market going up, the market going down.
So it's not just about how much money you have to invest. It's really about your personality,
No.
like how you handle risk in general.
Exactly. Someone with a low risk tolerance, they might not be comfortable putting a ton of money into VOO, even with its historical performance, right?
Yeah.
They might prefer something a little less volatile, even if it means maybe lower returns.
Yeah, that makes sense. But then on the flip side, for someone who's okay with a bit more risk, VOO's potential for growth could be really appealing.
Absolutely. And it's important to remember that risk, it's not just about losing money. It's also about potentially missing out on gains. If you're too afraid of risk, you might miss out on some big opportunities.
Well, that's a good point. So it's all about finding that balance, right? That sweet spot between risk and reward. That fits your own life and your financial goals.
Exactly. And speaking of market dynamics, we've been talking about VOO's potential for growth and all, but what happens when the market takes a hit?
Right. What about those times when things go down?
Everyone wants to know about that.
It's going to happen, right? It's inevitable.
It is.
But the sources all mention that, even in those bear markets, where the market is down for a while, VOO has consistently recovered over time.
Yeah, it's true. It might experience dips along the way, of course, but historically it has always bounced back and often ends up reaching new highs.
So if you're in it for the long haul, that ability to kind of weather the storm, that's
Yeah.
pretty reassuring.
It is. But to really understand how VOO performs in a downturn, let's look at a specific example. Remember back in 2020 when the market crashed because of the pandemic?
Oh, yeah. That was a wild time.
It was. And just like pretty much everything else, VOO dropped. But what's interesting is that it actually recovered faster than a lot of other investments out there, and ultimately it hit new record highs.
Wow. So even in a crisis, VO held its own.
Yeah, it did. And that's because the S&P 500, which is what VO tracks, it's made up of these companies that are generally well established. They have a strong history of weathering economic storms.
That makes sense. So does that mean VO is only for long-term investors? Like what if someone has a goal that's a little shorter term?
Yeah, it's a good question. VO is often seen as a good option for long-term growth, but some people might use it for shorter-term goals too. It just comes with its own set of considerations and risks.
Like what?
Well, the market can be unpredictable in the short term. So trying to time the market to make quick profits with VOO, it can be pretty risky. You could end up selling at a loss if the market suddenly dips.
Right. So it's not impossible to use VOO for the short term, but it's generally better for those who are thinking long term.
Yeah, exactly. Remember, investing is a marathon, not a sprint.
Okay, so we've covered risk tolerance, long-term versus short-term investing, and how VO handles those tough times in the market. But there's one last piece of this puzzle I want to talk about, the expense ratio.
Oh, yeah, the expense ratio. That's a big one. A lot of people overlook it.
Yeah.
It can really make a difference in your returns over time.
Absolutely. So for those who aren't familiar with this term, can you break down what the expense ratio is and why we should care?
Sure. It's basically the annual fee that you pay to Vanguard, the company that manages the ETF. It's like a management fee for taking care of your investments.
So like a small percentage of your investment goes towards running the fund behind the scenes.
Exactly. And VO has a super low expense ratio, just 0.03%. Yeah, so for every $1,000 you invest, you're only paying 30 cents in fees per year.
That's practically nothing.
It is. And it's important because over time, even small differences in those fees, they can add up. With a lower expense ratio, more of your money stays invested. And it can grow faster thanks to compounding.
It's like the tortoise and the hare of investing. Slow and steady wins the race.
Exactly. So VOO's low expense ratio, it's definitely a big plus. You get a diversified portfolio of successful companies with minimal fees eating away at your returns. But even with all these advantages, there are still some things to think about before going all in on VOO.
Right. And one thing we haven't really talked about yet
Yeah.
is the individual companies that make up VOO. I mean, we know it tracks the S&P 500, but what does that actually look like in practice? It's kind of like we've been talking about VOO as this big, powerful thing. But we got to remember, it's made up of individual companies, each one with its own story, risks, potential.
Yeah, for sure. And when you really look at what's inside VOO, you see this really diverse mix of companies from all different parts of the economy.
I mean, we're talking tech giants, healthcare, energy, financial companies, consumer goods, everything, right?
Everything, yeah. As of 2024, some of the top holdings in VOO, they include some really familiar names like Apple, Microsoft, Amazon, Nvidia, Alphabet, Tesla.
Wow, so you're saying just by investing in VOO, I could own a little piece of companies that are shaping the future of tech, like AI, electric vehicles, all that.
That's right. But it's not just those big, flashy tech companies. VOO also includes companies that provide essential goods and services, like healthcare, energy. Those tend to be more stable, even when the economy is uncertain.
So it's like a built-in balance, right? You've got
Yeah.
those high-growth, potentially risky companies, and then those more stable, essential ones.
Exactly. That's one of the major advantages of investing in a broad market ETF like VOO. You get exposure to a wide range of companies,
Yeah,
which helps to lower your overall risk.
diversification. Gotta love it.
You got it. And speaking of diversification, it's important to realize that VOO's holdings, they change over time. As the market shifts, new companies pop up, the S&P 500 adjusts, and so does VOO.
Ah, so it's not a static investment. It's constantly evolving with the market.
Precisely. That's what makes it so powerful for long-term growth. It's designed to capture the potential of those top-performing companies, even as the market landscape changes.
All right, so we've covered a lot of ground today. We went deep into how VOO works, its impressive historical performance, those dividends, and how important it is to match your investments with your own risk tolerance.
We talked about how simple VOO is to use, its ability to bounce back from tough times in the market, and that super low expense ratio.
But even with all this info, we got to remember that no investment is completely risk-free.
Definitely. There's no magic formula when it comes to investing. It takes research, careful planning, maybe even talking to a financial advisor.
Absolutely. We've given you a lot to think about today. But at the end of the day, whether VOO is the right investment for you, that's your call.
Yeah, it's your financial future.
You're the captain of your own ship.
Do your research, weigh the pros and cons, think about your own situation, and make the choices that align with your financial goals.
And remember, the world of investing is always changing. Stay curious, stay informed, keep learning. Let us know your thoughts in the comments. And don't forget to like, subscribe, and hit that notification bell for more investing tips. Thanks for watching and happy investing.